In today's video, I'll show you how to use the NYSE tick along with the cumulative tick to spot trend days before they take place. The idea is to use the clues that the market internals give to us to spot some of these trend days when we have consistent themes that keep reoccurring. Now let's start first with the NYSE tick. To access that inside of Thinkorswim, simply go to $TICK in your ticker symbol list, and there you'll find a chart that looks something like this. Now I have a few different lines drawn on my chart, really a horizontal line at 0, and then two sets of bearish lines at 600 and minus 1000, and then positive 600 and positive 1000. Now what you can see early on today, this is Thursday's trading activity, is we had price action fail to break above that 0 mark in the first 30 minutes of trading. In fact, the tick struggled here, starting well below that minus 1000 mark, and we just tried to keep crawling our way back. Then we had a step back one more time, and really we didn't break above that 0 mark until we hit right around 715. So it took us a long time today for the ticks to get back to that 0 mark. That was your first clue that, hey, there's a good deal of selling pressure. The fact that in the first 30 minutes the ticks were unable to get back to 0, it doesn't look like a barcode like we had, say, in yesterday's trading activity, is a clue and a sign in itself. Now let's move on to our second clue, which, if I come into a chart of SPY, is through our cumulative tick indicator. You can see it very clearly plotting right here that, hey, we're likely to be trending down based off of what the cumulative tick is currently doing and what it's done previously in the past. Now the whole idea here is we can see the ticks are decreasing through these gray dots, no cyan dots outside of the first, which tells you consistent selling pressure. We don't see any little periods of bullishness coming through. We're also getting our trend signal coming on, and this happens at 7 a.m. Pacific. Again, another sign using the internals that, hey, typically when we're at these levels, we tend to have a trend day inside of the S&P 500. And now if we move on to taking a look at our actual charts here, you'll also notice a few different entries that stand out. The market pulse, very clearly red, telling you you're in a stage of deceleration. A few different bearish squeeze arrows that we have along the way all throughout the day. Funny enough, the way that the market moved today was really in two big chunks. This is what I call chunk number 1, and this was early on in the morning till about 7:30. Then we just slid down lower, but this was really more sideways than anything else. And then we had our next leg down, funny enough, during the lunchtime hour, and it's funny just because these weird things tend to happen in that 9 to 10 a.m. Pacific hour or the noon Eastern lunchtime hour. And that was exactly true today. The fact that we had this next leg move down lower during the lunchtime hours was no less a surprise than I think we were expecting funky things to happen during that period. Now after that, again, chopped around sideways before the trend then finally reversed into the close. So the beginning portion of the day is what we're looking at using these market internals to help give us insight and clues into. I hope you found today's quick video to be useful. In case you'd like to see another example of the same internals idea being applied on a different trend day, be sure to check out our previous video from last week in which we break that concept down in a bit more detail. Take care everyone, good luck trading, and I'll see you in the next update.